All right, everyone, welcome back to another video. Today we'll be talking about coronavirus, what it means for real estate, what it means for the markets, and how you can position yourself to take advantage of the situation, or at least to set yourself up for the future. So as you can see here, there's been almost 150,000 confirmed cases. This has really spread really quickly across the globe, starting just here in China. You can see Europe, the US, South America, Africa. Pretty much everywhere is infected. So what does this mean? You can see here the total number of cases here in mainland China, which has started to actually taper off. Now, we don't know how accurate these numbers are, but that's at least a good sign, as well as the number of total recovered people. So we don't really want to freak out too much, and hopefully what we get is like in a place like South Korea, where they had really good containment, the number of cases is starting to taper off, at least the number of new cases, and as such the total growth in new cases, as represented by this yellow line, can decrease quickly. So we can see here that things started to ramp up in February, and by about a month later, South Korea had contained the coronavirus. So if we look at the stats for the US, and let's say we make a similar comparison, United States, let's take a look. As you can see here, we're just starting to enter the parabolic phase. And such, maybe I would hope that over the next 4 weeks we can see a case like in South Korea, where the total number of new cases here starts to decline. So that's my hope. If any of you guys remember the Zika virus, that was something that was affecting the real estate markets back in the day, especially here in Miami, where we are right now. And everybody's forgotten about Zika virus, and real estate prices are just fine. And so, as you can see here, we're looking at bird flu. Bird flu lasted about 2 years. Swine flu lasted about a year. Ebola lasted about a year to 9 months. And we also had Zika virus, which also lasted for about a year. So we have better technology, we have the internet these days. More and more people are staying home, and I think we'll see a full quarantine here in the United States, or at least more drastic measures to prevent the spread and such. I don't really expect coronavirus. As you can see here, there's a group here that did a study on how epidemics affects real estate. Guys, especially for residential real estate, Zika virus is not really going to have an effect. People are going to stay in their homes. They're going to work from home. At the end of the day, they're actually going to spend more time in their real estate. So residential real estate is going to be fine. I think you'll see hits in the hospitality sector, as well as in shopping centers. And we can see that through the likes of some REITs here. So PIMCO Realty Corp, they own only shopping centers, and as you can see, the stock is down 50% from the October highs. We can look at another example here, BRX, also down another 42% from just a few months ago. So there's definitely a lot of panic here in the markets, but again, I think once coronavirus starts to, the contagion starts to be reduced, then we'll see prices bounce back. And I think a lot of people are freaking out here that stores are going to be closing and things like that. And it's true, we may have, a year or so of slow sales in the retail sector, but these tenants have multi-year leases, and I think everything's actually going to be okay. And this may present itself to be an opportunity. And full disclosure, again, this is not financial advice. These are just some of my ideas. So looking at shopping center REITs, you can see here that the green line is NOI growth. So we can see here that the growth has been declining for the last couple of years, but is not switched negative. And so there's been a lot of negative sentiment around around shopping centers. And so maybe this might be a good opportunity for a buying opportunity, because when everybody's greedy and prices are high, that's the highest point of risk. But when everybody's depressed and afraid, and there's a lot of fear in the market and a lot of blood in the street, that's when you want to go out there and buy things on the cheap. So again, not financial advice, but I personally am doing some research into some of these shopping center REITs to see if there's any opportunities, especially because the stock could be trading either below or above the value of the physical real estate. So that's something I'll be investigating this weekend. Another statistic that I liked was this one here. We see the blue line here is the development pipeline, and you can see NOI growth kind of leads or is leading it. So we can see here that we had strong NOI growth. We had a lot of new developments, which caused the NOI to decline because there's more stores out there, more competition, rents are not going up as much. Then we had a real good growth in NOI. Then we had the development pick up to kind of fill the increase in demand, and now we've seen development really fall. So if there's less new supply coming on the market, then we would expect market rents to increase over the long run. And so this may be an opportunity over here that we're looking at. Now, I do think coronavirus is a limited time event, let's say, especially here in the US. Let's say it'll take a month or two for us to contain the virus. That's not going to fix some of these underlying problems that we have here. So, for example, United States manufacturing PMI, which is a measure of manufacturing, has been in a downtrend for the last 2 years. If you look at the Australian PMI, which is a heavy commodity-driven industry, they do a lot of mining, a lot of raw materials for construction. You can see that's also down for the last couple months. China had a huge decline in PMI. France also doesn't look too good. Hong Kong been declining for a while now. So it's true we could be entering a recession right now, mostly triggered by coronavirus as the catalyst or the fear event. And if that is the case, then so be it. So the what you need to be here is prepared. And so let's take a look here. This is the S&P 500, and this is a little analysis here on how long these market declines usually last. So we have here the 2000 tech boom bubble that lasted for 3 years, 770 days, depending on how you count it. If we look here at the 2008 financial crisis, that lasted for 532 days. We had another pullback here for 14%, that lasted 280 days. We had another crash here for 20%, that lasted for 110 days. And this crash here right now, if we zoom in, we can see how many days we're in this environment so far. It's only been 30 days. So, my projection, if you will, I think we get down lower. I think maybe a 40% pullback. And I think this time of volatility will probably last for about a year. So what does that mean for you? Well, that means that you can expect the market to be choppy. Well, and just full disclosure, we don't know what's going to happen. The future is uncertain, and this is not financial advice at all. So if the market is chopping around in here for a year or maybe longer, let's go back to 365, we can expect there to be volatility and buying opportunities here to maybe set us up for the long haul to go higher. And so this is a perfect time to take advantage of if you're looking to get interested in investing. We have not had such a deep pullback so quickly in a long time. So you can definitely load up on some of your favorite stocks, Amazon, for a big discount. Let's take a look at Amazon. Well, looks like Amazon's holding up pretty well, 20% discount. So not so high, but there are a lot of other stocks that are much cheaper. If we look at gold, now gold is something I'm getting interested in as well. If you see here, we've broken out of this this level here where we were holding under, and now we're back up. We're above the 200-day moving average, above the 50-day moving average. And as you can see here, from 2005 to 2011, gold had a 350% return, so 3 times 5%, 3.5x on your money. I think this could be a good buy for long term, especially after a recession. People are afraid, and people see the value in this, especially as central banks continue to print money for a long time. So how do you take advantage of this? I think everybody who does not have an IRA yet should definitely consider one. It's a tax-advantaged account. You can buy real estate, precious metals, oils, pretty much anything other than collectibles and art, I believe. But again, do your own research here, but you can invest in stocks and in many other assets. And the main advantage of this is that your wealth can grow tax deferred or tax free, depending on if you do a Roth or a traditional IRA. So let's say you get a 12% return, you invest for 30 years, you take out all your money at the end of 30 years, you put $12,000 in your account today, and then you add $6,000 a year or $500 a month. If you were to put that money in a taxable account, you would have $1.157 million. If you put it in a tax-deferred account, such as a traditional IRA, you'd have $1.88 million. And then if you put it in a tax-free account, you have $2.2 million. And so this is the power of tax-free retirements or retirement accounts, is that your 1.1 million could actually be 2.2 million. And so that's why I highly recommend that you take a look at a Roth IRA. Now, again, not making any specific investment advice, just saying that this is something you might want to check out. That being said, there's so many brokers out there that make it super easy. If you bank with Chase, they have a zero commission program here. You can open a traditional or a Roth IRA right just by clicking a few buttons. The Roth IRA is the one that I prefer for myself right now. The reason being is that you can contribute up to $6,000 a year. It grows tax-free. You can withdraw it without any taxes, and you only have to wait 5 years to withdraw your money. If you withdraw your money before that, then you have to pay a 10% penalty. But if you made enough gains and deferred enough or avoided enough taxes, or rather reduced enough taxes, I believe tax avoidance is illegal. But anyways, we're reducing the taxes. It's legal. You should be able to make up for that 10% penalty, as opposed to a traditional IRA where you're going to pay a penalty if you take a withdrawal before the age of 59 and a half, I believe. So if you want to look at stocks, just go to your bank and literally put, let's say I'm TD Bank, Roth IRA, TD Ameritrade. I know they have a partnership here. Boom, you can click here, open an account. It's that simple. You can invest up to $6,000 before April 15th, and it will count towards your 2019 contributions, and you can do $6,000 this year. So it might be a good idea to start looking at that. Also, if you're interested in loading up on some Bitcoin on the cheap, let's go to that graph right there. Bitcoin, let's go on TradingView. You can also buy Bitcoin in your IRA and as such. So this is something that I'm looking at. I've actually gone ahead and opened an account with Rocket Dollar. And what Rocket Dollar lets you do is set up an LLC, and your retirement investment is actually an investment in your LLC. And what that means is that now you can invest in literally anything. You can do stocks, you can do bonds, you can do cryptocurrencies, I can do real estate deals, I can do private equity deals, I can do private loans, all of that tax deferred or tax free, in my case for a Roth IRA. super cool. So it's a little bit more setup, it's a little more intensive. So if you're looking for something that's a little more passive, then Bitcoin RIA might be a good look. As we can see here, the price of Bitcoin is pretty low. I'm not gonna say if you should buy or sell, but it's definitely had a flash crash, and you know, it hasn't been to $5,000 in a while, especially when you compare it to the high here of $20,000. So there's a 300% potential gain. So anyway, so that's what I'm doing. Rocket Dollar for LLC retirement accounts. Use the bank that you're with to open up a Roth IRA if you want to invest in the stock market. If you're interested in investing in Bitcoin tax-free, then Bitcoin RIA. I'm gonna leave some links in the description so that you can check that out and see how you can do it. And so that's my thoughts for today. Subscribe to the video. I'll be putting out these types of videos on a more consistent basis, and I'll also be doing some whiteboard and tutorial videos. Awesome talking to you guys, and see you soon. Stay safe. Bye.